So you're all set. You've done your research on the infinite banking concept. You love the concept and know that it will work for you. You found the agent that you want to work with. You found the insurance company that you want to work with. You've even found the perfect policy for you in terms of the funding amount and time period that will work for you and your family. Congratulations. The only reservations that you do have at this moment is you are not sure if you can max fund your policy in the early years. Let's say you still are a little bit scared. You're first getting your family set up. Your career is just taking off and you may be a little bit limited on funds. What is something to consider if you are afraid that you're unable to max fund your policy in the early years? Take this term into consideration and remember this. MEC catch-up contributions, or MEC rollover dollars. This is the principle that you should keep in mind. Let's say, for example, you have a MEC limit of $20,000 for 20 years. This means that you have the ability to put up to $20,000 into your policy years 1 through 20. In the early years, however, you're a little bit more strapped for cash. So you can only put half of that. You only put $10,000 into your policy. You could have put 20, but you only used half. What happens to the unused $10,000 year 1 that you could have used? Well, that MEC space rolls on down to the next year in year 2. So year 2, you would have had a MEC limit of $20,000. But because of the $10,000 of unused MEC space year 1, it actually rolls on down to the next year so that you have a 20 plus 10 is a $30,000 MEC limit. This principle continues to have a role in the MEC catch-up contribution principle. So no matter how long you have not funded your policy for, you can still play catch-up in the years to come. What are some things to remember? Well, a lot of individuals are banking all of this MEC rollover space in the future. Let's say they are expecting an inheritance, a sale on a big property, to even win the lottery. So they are banking a lot of MEC space and they are purposely not max funding in the early years. Keep this in mind, however. The insurance company does reserve the right to have you go through underwriting if you are banking a large amount of money for the future. And this is usually in the realm of maybe $200,000 or $300,000. Also, if you're a little bit older in age, maybe past the age of 60, they may want to have you do underwriting again, just to make sure that you have not changed in any way in terms of your health rating. So they will question, why now? At the age of 65 years old, and you're putting in $300,000, why now? Have you been diagnosed with a chronic illness or a terminal illness? Are you trying to cash in for your beneficiaries? Just to make sure, we as the insurance company want to have you as the policyholder go through underwriting. This is what's going on in the minds of the insurance company. So if it is less than that, 200,000 or 300,000, and you are still relatively young, that MEC rollover space will continue to go on down the line, and you can always capitalize on those periods. So to put you at ease, is MEC space ever lost? No, it just rolls on down to the next year. Very similar to those old cell phone minutes, where if you do not use the minutes in a given month, it rolls on down to the next month so that you can use it again. So if you have any reservations about opening up a new cash value life insurance policy, specifically because you are afraid of not being able to max fund it in the early years, just remember that MEC rollover principle. MEC space is not lost, it simply rolls on down to the years after. Hopefully this helps. We're here to help you in any way that we can. Brandon here from Infinite Wealth Engine saying stay healthy and stay wealthy. Thank you so much for watching. If you like this video, make sure to like, subscribe, and comment below. If you would like more information, visit us on the web at infinitewealthengine.com or click on the link to receive your free PDF on how to build your own infinite wealth engine using the infinite banking concept. We look forward to talking with you soon. Brandon here saying stay healthy and stay wealthy.